And good evening. This is the Elliott Wave update for the S&P 500 for Wednesday, March 23rd, 2022. The S&P did continue to move lower in today's session and appears to be on its way to possibly forming that initial 5 waves down, which will give us confirmation that the highs at about the 45.14 level did complete that minor wave 2 correction. Now, I've only put in the sub-minute wave 5 here as kind of almost like a placeholder, because in honesty, the market has broken below where I would consider wave 1 of 5, and I'd like to see it break actually below what I've labeled as wave 4, and that's 44.15, before I really start to put the concrete to the slab, so to speak, and mark this as the completion point for wave C, minute wave C, and then minor wave 2. So if I can open this up, I can show you a little bit of what happened today. Now, go back that way, go back, there you go. So if I mark this as wave 5, it ended up in a very small failure, but that's, I'll live. Because then remember, as I said, it does appear that we just got a 1, a 2, a 3, and a 4, and a 5, and it was almost like a triangle going up into that high. So if this is 1, this might be 2, again, very minute level or sub-minute level. And then we're starting in the 3rd wave. Now, it's really going to depend on what happens here. Now, unlike the NASDAQ, which drew a battle line at that 50, the hourly 50 MA, which we initially did see here in the S&P. When the S&P initially came off this morning, it dropped below the 50 MA, came back above the 50 MA, and that produced a nice rally, which did not even get close to the intensity or the height that the same rally time in the NASDAQ created. The NASDAQ came within 8 points of breaking to a new high for the sequence, whereas the S&P was basically, if this is, we'll call it 93, and the high was 45.14, it was 21 points away, 21 S&P points away. So big difference in how the S&P traded versus the NASDAQ. The NASDAQ continues to have that battle line drawn right at its 50, hourly 50 MA, whereas this might still be a line in the sand for the S&P, but it's not really being in play right now. And as we can see, they are, somebody's ridiculously deciding they're going to bid 44.70 for in the S&P, which I find pretty ridiculous. But I think that that's just really mismarked. And it's probably going to open maybe up 50 cents. And that would be in the Globex session, which is doing 8 minutes. So S&P a little bit different prospects going forward. I think that we stand a fairly good chance. I'm not declaring it yet. I only put a place marker there with that sub-minute wave 5, and that we're looking for a continued downside. Now, what we now need to see, if indeed this is 1, 2, and we're inside this little third, it needs to continue. It needs to continue. It needs to break price support at 44.25. It needs to break price support at 44.14. It needs to break price support at 4400, and then begin to make an advance on and a break of the 200 moving average, which is at 43.83. Now that might be a little big ticket to get to, because right now on an hourly chart, we're getting a little bit, the momentum and the stochastics are kind of showing like, man, maybe we bounce a little bit here, but that's fine. If we get a bounce, now I'm going to be expecting that bounce to be held basically by the moving averages, which is the 8, which sits at 44.66, and then the 50, which is at 44.71. We have the 20 even above that at 44.78. So we got pretty good resistance zone from 44.68 up to 44.78. So $10 resistance zone to contain a pop. Now, I would also expect 44.65 to come into play as the previous low of this wave down. So again, if this is a 1, if this is 1, 2, and now we got another 1, 2, then I'm not expecting it to go above there, back above 44.93 or 94. So what I will be looking for is, again, the development of what we're looking at in terms of what's up next. Are we definitively inside the beginning stages of a minor third wave down? And if that's the case, then boy, we really can look forward to some stronger acceleration to the downside, some just wiping out a lot of these levels, of breaking through a lot of upside support that's coming from outside. So we're going to have to see a lot of things happen in between. So again, upside, I think right now could be limited to between 44.68 to 44.78. A break above that, again, puts us in the danger, excuse me, where we're going to get a rally that'll break back above 44.94 and eventually 4,500, and then eventually get us back up towards 45.14. And then still upside, we still need to consider we could get to 45.23 or possibly higher, as previously discussed. And that would be for still a continuation of this minor wave 2. Now, that's not high on my list. The only thing I could possibly do is to move the 3 up to here, the 4 over to here, and then we get a 5. All of this is getting a little bit too big and extended for this degree. So we got a few things going on. But is it possible? Yes. Is it trackable? Yes. Is it countable? Yes. So all of the above, we still need to allow for this type of a move up. Otherwise, we are looking for the signs of a continued breakdown again. Price support at 44.25, 44.15, 4,400, and then 43.83. That's the line in the sand that I need to see broken to give additional confirmation and support that we are definitively in that minor third wave down. So again, trade smart, trade according to the price action, follow the price action, don't battle the market. It's already doing it upon itself. And the next update will be on Thursday, the 28th.